Hello and welcome to the Finance Quarter. I'm Andrew Robertson. Pricing is a major issue for every business. Charge too much and people won't buy your product. Charge too little and you'll go broke anyway. So how do you get the pricing right? It's an issue I discussed with small business expert Julia Bickerstaff. Julia, when a small business is setting its prices, what are the key issues for you?
Well, there are three main ones. The first one, which sounds incredibly obvious, is what the cost of your product is. You know, I've actually come across quite a few small businesses who haven't really understood the full cost of their product, and they've actually sold their product at less than the cost price. So it sounds obvious, but it's really important to completely understand the costings of your product. The second one I think about is where your product sits compared to its competitors. So, you know, if you look at something like ice cream, for instance, there are a number of different types of ice cream, a number of different types of competitors. You know, over at one hand, you've got something like a home brand type ice cream, which is very, very, very cheap per litre. And at the other extreme, you've got something probably like, you know, Ben & Jerry's, which is a luxury item. So you need to work out where you think you fit in that scale. And the third one is it's all about customers and about how customers value your product. So they need to think they're getting a little bit more from you than they're paying. And that's a really tricky thing to work out. But one of the best ways to do that is to have a look at what customers spend on other things. So you look and see what your customer thinks is value in other services and products they buy. But you have to be across all those three different dimensions.
Just on the cost of the product, it's not as simple as adding up all the raw material inputs and then adding a profit margin and saying that's the price, is it?
No, absolutely not. I mean, finding out your actual cost, it's everything that goes into actually building that product. So there is, you know, the raw materials cost, but there's the time cost that you're including in there as well, distribution costs, there's a whole lot of costs. I mean, I would also look at actually what it costs you per unit to market that product. You know, you actually want to build up a real good idea of what it's really costing you for that product. And then you don't just add some percentage on top of it. The reason that you calculate that is to make sure that what your final price is well above it. Because if you don't do that, those numbers, you can think, well, I fit here with my competitors and this is what a customer would value, and come up with a price which is below that cost price.
If you're running a small business and you become successful, you're going to run up against competitors trying to muscle in and take some of your market share. And the natural reaction is to cut prices to defend that market share. But that's not a good strategy, is it?
Oh no, I mean, it's very tempting, and I think that one of the first things as small business owners we think of is, you know, if I need more customers, I'll cut my prices and they'll all sort of come flying in. And really, you know, we sort of learned a little bit in economics, not an awful lot, and one of the small bits we learned was, you know, cut prices, sell more. But actually, you know, imagine you sell a product and it costs $50 and you sell it for $100 and you knock $10 off that $10 discount, but actually, you know, you lose 20% on your profit on that one. So just to stay in exactly the same place, you actually need to sell 25% more of your product just to be where you already are. Now imagine bringing 25% more people into your business just to be in the same place. I mean, that's a big ask. You're still going to need to have a strategy of actually how you find those customers.
So if you're going to compete and you're not going to discount, what can you do?
Well, there you've got to really think about, you need to have a proper marketing strategy, and it's all about, you know, your product and how your customers see value in it, what's special about it. So a lot of it comes down to being really clear to customers about what they're getting, especially if your product is pretty similar to other people's. You know, what is different about it? Why is yours special? What does it do for somebody? How does it solve a problem? And, you know, is there an experience that you can put around it? You know, a good example of that is, I think, is people who sell products online, where you can probably find them in a few different places, but some of those businesses are very good at the wraparound service, the, you know, 24-hour sort of helpline. You know, the person on the phone who's very approachable, the fact that you can return goods quickly, you get your money back quickly, you know, all that, the service around the product, which actually helps those businesses actually have a little bit of a higher price.
So it's really all about adding value and adding experience and making people willing to pay your price or even pay a higher price.
Well, absolutely, and that extra service and extra experience probably won't cost you very much more to do, but it's actually about being disciplined enough to do it and to do it every day, because it's the hard stuff. The reason that nobody else does it is because it's a little bit hard to be nice to people all the time, or to actually put the process in place, maybe to always be answering the phone, to always be helping customers. It's the hard stuff, but it's the stuff that customers value, and so it's worth doing it.
Well, you've given us a lot to think about. Julia Bickerstaff, thank you very much for your time. Over the years, tinkering with the superannuation system has proved an irresistible pastime for federal treasurers. In his latest budget, Wayne Swan stayed true to form with implications for the retirement incomes of many thousands of people. Well, for his take on the budget changes, I spoke with Sydney-based financial planner Damien Cullen. Damien, as I've just noted, governments are always tinkering with the superannuation system. What does that do to people's confidence that super is the right vehicle for them to save for their retirements?
Look, it's certainly not ideal. It just continually erodes confidence. People aren't sure what the rules are going to be. The number of clients that I speak to say, you know, look, it looks good now, but what's going to happen down the track? Each government that comes in tends to tinker and change. And when you're putting money away that's going to fund the rest of your life, you want to have a certain degree of confidence on how it's all going to work. The superannuation system is pretty complex, so every time there's these changes, people just throw their hands up and say, well, look, it's too complex, I don't understand it. You know, maybe I'll go and buy an investment property or do something else. So it's not good at all, really.
Well, one of the changes the government announced in the budget was the doubling of the contributions tax for people earning more than $300,000 a year. Is it your view that those people will now look for other ways to minimise their tax?
Oh, definitely, yeah. It's a bit like water, it always goes to the point of least resistance. If you've got to pay more tax and you're uncertain about what the future is, you're going to look at options that are simpler and clearer for you. So things like negative gearing are going to probably be more attractive to people that are at that stage of their lives. Whether that's a good thing or not, you know, is debatable. If the whole nation simply bought houses, it really wouldn't do much for the productivity of the country. So super is a great system to save for retirement because it's a regulated environment and it spreads money throughout productive capability of the country. So it's a great thing to do. But if you're going to get whacked every time you get, you know, a bit successful in this country, then you're going to look for a way where you've got control rather than someone else.
The government has cut the maximum tax-deductible contribution to super to $25,000 a year. It had been planning to make an exception for people over 50 with low superannuation balances, but that's now been postponed. Can you see any justification for that?
No, I can't, except for balancing the budget. If the policy is a good policy to be able to allow people to put $50,000 into super this year, and then they're going to let them to put $50,000 into super in 2 years' time, why are they dropping it for 2 years? Clearly the only reason is to balance the budget and a political move. So I don't agree that they should be doing that with the future retirement of Australian people just to score a few political points.
Well, notwithstanding that, people can still put up to $450,000 into super over a 3-year period, but just with after-tax dollars, so it's actually not stopping people contributing to their super funds.
It's not, but that assumes that you've got $450,000 in after-tax money, whereas the $50,000 was an amount of pre-tax money that you could put in. So if you're earning money each year, it allowed you to do that. A lot of people in that situation in their lives are now at a stage where maybe the kids are growing up, the mortgage is paid off, and they've now got not a huge lump sum like $450,000, but they've got an income coming in where they can afford to sacrifice a larger amount of that income to fund retirement. That's what's being taken away from them.
You also believe that the failure to cut the corporate tax rate will have an impact on the super system. How do you see that playing out?
Look, the higher the tax rate, the lower the valuations you're going to get on companies, so it's going to reduce the superannuation fund balances or have them not go up as much as they would have if tax rates were lower. It also reduces confidence in the government in that when something's promised, it's not delivered, so then you lose confidence in the overall system. So whenever taxes are higher, it's going to be a bad thing for super generally.
What should the government be doing to make the superannuation system more effective as a vehicle for people to save for their retirements?
This constant tinkering with it just takes away confidence. Just simplify it, I guess, in one budget as much as possible and then leave it alone. So look, we're not going to touch super for 5 years. These are the rules. Eventually they can adjust them, but if it was simple and wasn't touched, that would be the best thing that anyone could do.
Damien Cullen, thank you very much for your time.
No problems, Andrew.
Now, still with the budget, and the centrepiece was the prediction that it will be in surplus by June next year. The key point, though, is that it is just a prediction, and the future is very hard to predict. In the 2011 budget, the government forecast a deficit for this financial year of $23 billion. 12 months on, in the 2012 budget, that deficit had blown out to $44 billion. The 2012 budget is predicting a surplus of just $1.5 billion for next financial year. We won't know till the 2013 budget just how accurate that forecast is. So will it be the forecast $1.5 billion surplus? Will it be a $10 billion surplus or a $20 billion deficit? Only time will tell.
Well, the credibility of the budget really comes down to the Treasury's forecast of economic growth for next year. They forecast 3.25%, and really the entire budget revolves around that one number. And when you have a look around the world, there is a lot of downward pressure on that number. We're having a slowdown in Asia. We got significant problems in Europe, and we've still got troubles to adjust to in the US. And so overall, one would have to suggest that the balance of risk to that forecast is significantly to the downside. And if that were to occur, the government might lose some credibility, but financial markets wouldn't be at all concerned about it. As long as it's a small deficit, probably under $10 billion, financial markets would still say our debt position is very strong, it's under control, and it's certainly not to the extent that of the troubles that we've got in Europe and the US.
Just one final point on the budget. There's a saying in business that if you ask your accountant what your profit was, he'll ask back, well, what do you want it to be? And there's a big element of that in this budget. The government was determined to have a surplus next year, no matter what the state of the economy. And here's an insight into how they did it. This is one of the budget documents, and if you open it, there's a big section entitled Building Our Nation's Infrastructure, where the government outlines a $36 billion program. It includes things such as widening the Pacific Highway, a big improvement to road safety, a major freight hub in Sydney, and a rail project in South Australia. The interesting thing, though, is when you go down to the back of this document, to the numbers, to where the government says major initiatives in the budget, and you look down this yellow line, which is spending for 2012-13, you see there's nothing for the Pacific Highway, just $100,000 for the freight hub, nothing for road safety, and nothing for the rail project in South Australia, which means virtually all the government spending on infrastructure is being pushed out into future years. And remember, every dollar that's not spent next year contributes to that $1.5 billion forecast surplus. Well, that's it for this edition of the Finance Quarter. As always, if you'd like to see any part of the program again, you can find us on the ABC News website. Just go to the business page and click on the Finance Quarter icon. We're also on Twitter at the address on your screen now, and if there are any issues around money or business you'd like us to cover on the program, just drop us a line to the financequarter@your.abc.net.au. Thank you for watching, and we'll see you next time on the Finance Quarter.